Hello, and welcome to Season 5, Episode 1 of the ESG Experience, the podcast about all things ESG and beyond. Whether you're an ESG expert or just dipping your toes into the ESG universe, this podcast is for you. Together, we navigate the alphabet soup of ESG, share strategies, and discuss industry news and trends. I'm Helee, SVP of ESG Operations at Conservice.
And I'm Ryan Nelson, SVP and General Manager of ESG at Conservice. Helee, quick question. Did you know this was Season 5 we were starting today?
Season 5. It feels like
that?
There should be some sort of documentary special on the history of like how the podcast came to be and
how these seasons end and begin. I don't really know if they align with actual seasons of the Earth or not. But sorry, go ahead.
Well, good for us. Congrats to you on 5 seasons of a really successful podcast with millions of trillions of loyal listeners. It's been a ride.
Good.
All right, and today we're hoping to have some fun because we're joined of one of our own. So actually, Ryan, I don't know that we even have to be on our best behavior since Jack is family now. He's not technically a podcast guest. So we're thrilled to be joined not only on the podcast by Jack Davis, but at Conservice ESG by Jack Davis, who is our new VP of ESG Strategy. Nearly 3 decades working at the intersection of utilities and real estate, Jack has seen some things. He has. A natural consultant and skilled problem solver, he has designed and managed numerous award-winning ESG programs and market transformation initiatives. Creative yet practical, I've observed both personally. Jack relishes working with real estate leaders to add value through smart ESG strategies. In this episode, we are going to discuss recent ESG trends, the impact on real estate, featuring Jack's unique perspective on why he sees the opportunity to join Conservice. Jack shares insights into the unique aspects of ESG within the real estate sector, shedding light on its significance and potential for transformative change. All right, so welcome. We're excited to have you.
Welcome.
Thank you. That certainly sets a high bar, and I hope to leap over it without major injury.
Yes, let's avoid injury. I think it would be the first podcast injury that we've ever had if anybody does get hurt. So
especially from a podcast that's recorded virtually from like the comfort of our own homes.
Yeah, I may have like burnt my mouth on a coffee or something at one point, probably. But here we go. All right. Topic 1, it's a little broad. Trends in ESG. Let's see. Let's make that a little more specific. Should we just start exactly with the fact that it's polarized and divisive, and do we care about that, and what are we going to do about that?
Yeah, I mean, we could start there. There's certainly a lot going on, that's for sure, right? I kind of have a little bit of a framework in my head about how I think about what's going on today, and I can rattle off a little bit of that if that makes sense.
Please.
I kind of group what I see happening in 4 buckets of kind of mental buckets of what people are thinking. The first one is what I would call ESG maturity. We're no longer in the teenage awkward years. We're basically growing up, and it's becoming real. It's becoming more formalized. It's becoming more regulated, as evidenced by SEC and state of California and all that good stuff. But at the same time, kind of getting to what you said, Ryan, there's policy uncertainty. There's a politicization of ESG. There's lawsuits about who and why and who can and can't and invest as an ESG framework, and a lot of uncertainty about what the actual rules and expectations will actually land at, or where they'll land at. And even within the ESG world, there's changes. Like there was a big kerfuffle this past week and a half or so with the Science-Based Targets Initiative. Kind of was making some noise about how they evaluate RECs and offsets and things like that for your carbon targets. And that's kind of an in-house policy change that's uncertain. So there's a lot of things going on the uncertainty side. Next, I'd call performance anxiety. That is, basically it's not enough to be saying what you're doing from an ESG perspective or setting targets. You actually have to meet the targets now. Your properties, and in real estate specifically, your properties need to actually hit whatever energy targets and carbon targets you set. Sometimes there's regulations around that with building performance standards. There's concerns about greenwashing and verifying results, making sure the results are valid. So there's this whole kind of anxiety around the idea of performance, and moving the needle, but moving it in a way that you can prove that you moved it. And then, you know, with our particular niche of the universe, there's real estate reality. There's, you know, challenging times for commercial real estate. The office market obviously is kind of still recovering or stumbling along from COVID. You know, it's most of our clients are real estate folks, and they're dealing with things like high interest rate environments, and you know, housing affordability, and these kinds of issues that are top of mind all day. And ESG feeds into that, and also can be distracting from that. So their mindset is very, very mixed up with all these trends. So that's kind of my perspective a little bit about what's going on. I'm sure you guys have thoughts too.
I learned, yeah, thanks for that. It's a good way to think of it, kind of the level of maturity of where we're at. I learned a new term. I was fortunate enough to attend this week in New York, kind of an international summit on sustainability. And I'll recap a little bit of that as we go. But I learned the term green hushing, and I was familiar with this I understood what was happening, but to put a term to it, which to me is just like, you know, not holding back, I guess I'll just say, like, that's absurd. The concept that we are going to purposely be quiet about something like inclusivity programs that we may have. Like, we don't talk about them because it could stir things up if we are saying that we are trying to create a safe space for a lot of people to work, or that we care about the impact, you know, whatever. I mean, it's probably more when people talk about this, a lot of people don't even know what ESG stands for or what it means. It's just, you know, set up as something to be polarizing and attacked at this point. But the idea of having to be hush hush about risk management and transparency and governance and, you know, social concern and environmental concern is kind of sad.
Yeah, it's funny. And I mean, I personally, I've always kind of thought the term ESG was a little wonky and kind of inside baseball, but now it's gotten so out there and people don't understand it, don't really get that it's actually smart business. And if you had a money manager that has your money and they're not thinking in terms of some of these questions, you would probably question why your money's with that person, because there's risk. They're not managing the risk, right? So yeah, the green hushing, greenwashing, but then you go in it depends on the board, what state you're in, you know, sometimes too, right? You know, sometimes it's the opposite, it's green shouting.
Yeah, no, for sure. And that's why, I mean, the conclusion to me, it was kind of, what do you call it? A pinnacle or a turning point or whatever, because there was 30 companies at this summit and a lot of leaders in the industry and very aware of what's happening, on a lot of European people. And some of the people from the States kept having this discussion about the polarization, and the European people were literally like, really? What are you talking about? That sounds stupid. So, like, I guess I heard some of it, but I didn't know that it was that bad or whatever. So there was all that. And the conclusion was that we said together as a group was that we think that the attacks on ESG are at their peak right now. So maybe that's kind of in line with what you were saying. We're mature, or more mature, it's at the peak, and maybe it's going to calm down. I mean, there'll always be some noise, but maybe everyone said nothing is changing. LPs, pension plans, if you want the opportunity to work with certain the largest pool of investors, businesses for their own good, like, everyone is like, you know, avoid the noise as best you can, and keep doing what we're doing. So there was literally no concern from any of the practitioners about the fact that you know, that you read about it in the news, or that, I mean, there are laws that are saying, trying to limit states from using their pension funds with any investor who says that ESG is part of their consideration. So, I mean, it is real, it is happening, but you know, we're optimistic about where we're headed, I guess.
Yeah, and I don't know how political you guys want to get on this discussion, but you know, you scratch the surface on any of those laws and you see who's funding the politicians behind those laws, and it becomes pretty transparent pretty quick what's really going on.
Yeah. So, Jack, you talked about the evolution, and I don't know if you took it from me or I took it from you, but I say the same thing about how ESG is over its awkward adolescence and it's blossomed into this adult now. But did I steal that from you? Or did you steal that from me? Or
I
is
don't
it
know.
just
Maybe we're just, telepathically.
telepathic?
Yeah.
It must be the telepathy then. So what was your, maybe I don't want to use the word favorite, but if you think of the journey, you've been in the space for a long time. Where do you think that we as ESG service providers had the opportunity to make the most impact? Was it when ESG was in its nascency and we all called it sustainability and we were running around doing lead projects with, like chickens without heads? Was it a couple years ago when it was just picking up speed and finally now it became mainstream and everybody knows what it is? Or is it now when we're having to, perhaps combat this backlash? Is the most important work happening now? What do you think?
I think the biggest thing we could do is meet our clients where they are. And I think most of them are at a place where they're moving a little past the defining their program, defining what ESG is, reporting, doing their first couple of GRES cycles, those kinds of things. And now moving into the doing phase. Like, okay, we got the infrastructure built for our program and what we're measuring and why we're measuring it. Now it's time to go move the needle, as I said earlier. So I think setting ourselves up to support that even further and more aggressively makes a lot of sense to, decarbonize, work with our clients to help decarbonize their portfolios, put the climate transition plan together, and execute it. Say energy efficiency is always, one of the top 3 things you're going to be doing no matter what.
Mm-hmm.
When you talk about real estate, really doubling down on that and clean energy procurement and, again, moving the needle on those performance metrics, because I think, that's where you don't get the value unless you do it. And I see us moving kind of hopefully beyond, the fundamentals of measurement and certifications and more into the results.
Yep. That's a good point. And did that at all, a good segue into my next question or topic, influence your decision at this juncture, at this time, to join Conservice ESG? Why now? And what impact are you hoping to have, through the vehicle that is, by our measure anyways, the largest ESG service provider in the nation by count of properties, employees, however you want to slice it. But
yeah, well, first of all, we've known each other for years, the 3 of us and Todd and Michelle and the other leaders. I think there's always been a desire to work together at some level. And so that's always kind of been, behind the scenes. There's a funny story or kind of an anecdote I was thinking about the other day. Back in the 1920s, there was a famous bank robber named Sutton, I think his last name was. He was like one of these Jesse James types, Bonnie and Clyde, whatnot. And when the FBI finally caught him, they asked him, well, why do you rob banks? And he goes, well, that's where the money is. And Conservice is where the data is. And that's just one of the big attractions for me is, going to work at a place where we have the data, we have the intel, we have the infrastructure at our fingertips to then build these programs on top of. So that was a big a draw for me. And also the market presence of the big Conservice, with the presence they have in the marketplace, it's a really strong position to be in. And then as I'm getting to know the team better and understand, what people are doing and what people are working on and what our clients are asking for, I'm already seeing there's just untapped potential here that we really can unlock. I think it's going to be fun to work on.
Awesome. Yeah, I agree. And I think that you might be the catalyst to unlock it.
Well, I hope so. I hope I stir up some trouble. That's for sure.
Yeah.
Yeah, I love hearing the comment of untapped potential, but also it stings because I'm like, why didn't we tap it? It's time to tap it.
Well, you're busy. You're getting them acquired and merged and getting a lot of the platform built. I mean, that's no small task, right?
You don't have to placate him. Just tell him that he failed to tap it, and you're here to tap it.
It's getting tapped one way or another now. So,
well, the funny thing is, I was on a discussion with one of our consultants this morning, and she's already supporting a client on getting preparations ready for the SEC disclosures. I mean, today, like literally, she's writing the protocol for how we would support that. And so I think the clients are already tapping you guys. It's just not publicly out there as much as we might like.
Yeah.
what is this SEC disclosure that you speak of?
Yeah, it's the climate risk disclosure that's been in the works forever, and now it's already on hold because it's under being sued. Anyway, it's for those of you for those listeners who don't know, it's the ruling for publicly traded companies who are accelerated filers, I think is the term. Basically, people who are doing 10K reports and those kinds of things will need to disclose to the Securities and Exchange Commission report on their climate risk and various disclosures around how they're managing climate risk, what their financial risk is to various climatic events, including physical risk, transition risk, et cetera, their carbon emissions. There's a whole host of things that the SEC wants these companies to file, and the rationale is because if you're an investor and you want to put money into a stock of Apple or McDonald's or whoever, you want to understand the risk that is associated with climate change to that particular company, and that risk takes a lot of forms. And so it's a transparency investor education exercise on behalf of the SEC. They did something similar a couple of years ago on cybersecurity, where they made companies disclose more information about cybersecurity. So again, investors have better information to make decisions on which stocks and which companies to put their money in.
Yeah, I think it's since we're talking a lot about maturity, I think it's a really mature, I don't know if we can think of it on the broadest scale, like for the public markets or for capitalism to start saying that, hey, these companies are more than their financial metrics. What are the non-financial data that is good for people who are investing their retirement funds into these organizations, that maybe there's a bigger picture than just the standard financial documents that tell the story of this organization. And the fact that that those stock exchanges are deciding to make that a requirement, the SEC is to make that a requirement, so that we can have that story, I think is good. So cybersecurity and ESG or climate specific, at least, I don't know. I think it's a good signal, and I think it being challenged and all that. What I gather is kind of a normal part of the process, like not super surprising that there's going to be some delay and pause and all that.
Yeah, I mean, there's a group of nonprofits and think tanks that are anti-regulation of any kind, right? And they're going to always challenge these things. But then there's a lot lawsuits and rulings and back and forth. This is going to take some time to shake out for sure.
I wonder what happened to a couple of years ago. NASDAQ put something out under the guise of ESG, but it was like a DE&I mandate around each board of their listed companies had to have one female and one minority on the board by, I want to say it was like 2024. Should follow up on that. I wonder if they made any progress towards it. I know at the time it was something like only 20% of the companies met that requirement, and you couldn't double dip. You couldn't be like, I hired a minority who's also female. They had to be like two separate people. But I'd be interested to see if they were able to achieve that, or there was definitely some like exceptions, and people could, if they really wanted to skirt it, they could figure out a way to get out of it. But I wonder where they landed on that. Have you followed that at all, or?
No, I'm not unfamiliar with that one in particular, but it would be interesting to see where it landed.
All right, making a note of it. We're going to see where
I hope it's just been progressing. I think there was plenty of time. It might have been challenged too. I hope it wasn't thrown out. I don't know. I hope it wasn't. But yeah, it'd be good to know the latest on that for sure.
You put out these mandates, right? Companies put out mandates like that, or like net zero by X year, and then you got to do them. Or I guess you got to look silly if you don't do them, or I guess you got to explain why you didn't do them.
Yeah,
so you got to quit and make someone else do them.
Yeah, right. Yeah. Back to what you were saying. Back to it's action time. It did feel like the data collection, data coverage, benchmarking phase was kind of a long time, but maybe that's how these things happen. And what the Paris Agreement references, I think 2030 is a checkpoint towards 2050. So like 2030s in that wheelhouse now of like, if you're an executive at a company, you're like, I might be here in 2030. You know, I can't just punt this. Like, I got to start doing something.
I think yeah, I agree. It feels like it's taken longer than it should, but then when you roll up your sleeves and get into the data questions, especially when you look at real estate and energy data, I kind of jokingly say these are two of the most unique industries in America, and we're mashing and very different, and we're mashing them together in a way that trying to make them behave differently than they're used to. So utilities don't want to invest in new databases and software to provide their clients with different data in different ways, like whole building data, for example. Real estate companies aren't used to asking things, asking utilities for this information. And so you've had these two, 150-year-old industries dancing together in a way that's taken a while to settle out. We haven't solved everything. I mean, there's a lot of problems, as we all know. There's a lot of data management that still has to occur, but we're finally getting to a place, I think, where you can move past all the data issues, or at least the data's we're confident enough in the data and it's useful enough and to make decisions on, which is ultimately where you want to go.
Agreed.
All right, I know we're usually pretty good about subtly trading off questions, but I've completely lost such an organic chat. Is it your turn or my turn?
Oh, how about your turn on number 4?
That's what I was thinking. Telepathy all around on this podcast day. Okay, so Jack, we as we celebrate you joining our firm, we're delighted to have you. In case you did not notice, you were highlighted recently in a Conservice article, and you mentioned 3 things. Great soccer analogy as well, if you want to elaborate on soccer, but on how to have or make a winning ESG journey: data, disclosure, and decisions.
Yeah.
Tell us about that. Elaborate. Where does that come from? Why is that your philosophy?
Yeah, I don't think it's just my philosophy. I think it's a lot of people's philosophy. But when you break down what we're all doing, so the saying that you always get tossed around at conferences and things is you can't manage what you can't manage it if you don't measure it. And so that's where the data becomes critically important. You need to have solid information on whatever key performance metrics you're working with. That data needs to be in place. You need to be getting it in a timely manner. It needs to be accurate. So that's your foundation. That's kind of your I call it your defense from a soccer standpoint. It's what you're gonna build everything else off of. Disclosure is sharing the data in some way, shape, or form. So it's participating in GRESB. It's TCFD, or even certifying a building. That's a way of sharing performance data with a particular audience. So that disclosure is kind of opening a dialogue with your stakeholders about, okay, we have this information. We want you to engage with us on what it means and what you want to see more of. And then ultimately it takes you to the last bit of the playing field, which is decision making. Taking all this information and making decisions on how to change your real estate investment strategy or your operations strategy, or what types of equipment you're buying or what markets you're invested in. All this data and disclosure leads up to that. And if you're not doing the decision making at the end of the day and you're just kind of stopping at disclosure, you're not really, again, like we said earlier, moving that needle. So that's kind of a fundamental or rudimentary way to look at it. And there's a lot more underneath each of those 3 sections. But data, disclosure, decisions. It's a nice, easy phrase to remember to help you think about how your program should move.
And in your opinion, so I feel like people lay out these plans, or they have like the roadmap. You do the materiality assessment. You might have a 3-year roadmap. How often do you think people should be reevaluating their actual plan? Because I feel like people, they make a plan, they put it out, and then they're just kind of eyeballs deep in the weeds of executing and reporting or whatever it is they decided they do. How often do you think they should lift their heads up a little bit and be like, is this still the plan? Is this what we should be doing? What else is new? Is this plan still relevant?
Yeah. Well, 2 thoughts. So first, it's really easy for us to get caught up in the measurement and planning part of the cycle and not getting to the actual doing part of the cycle. So I use the phrase, the if you can't measure it, you can't manage it if you don't measure it, but you also can't manage it if all you're doing is measuring it. We spend a lot of time as an industry just on the measurement and reporting side. And if that's all you're doing, then you're not really doing anything. You're just kind of spinning the wheels. So that's one kind of thought. The next thing I would say is, back to the decision making and well, actually, can you repeat your question? Because I kind of lost it in my little ramble there.
Oh, that's okay. I was just thinking about our customers or people that have gone through the journey and they did a materiality assessment and they have their roadmap and maybe they're in year 2, 3, 4, 5 of their roadmap, but maybe things have changed.
Yeah.
How often should they be picking up their head and maybe reevaluating the plan, roadmap? And then also, of course, in contrast to that, you don't want to be changing directions annually, right? Because you want to actually move people and accomplish something and set a plan and stick with it. But yeah, so just in your expertise, how often do you think people should be reevaluating the actual plan?
So I think you need to at least kind of open up and look at your materiality assessment and your plan, kind of, and I'm talking about taking a deep look, really sit down and kind of reassess it at a minimum of a 3-year cycle. But if there are big market changes or regulatory changes or events that change the landscape of ESG and how you practice it, you might need to do it sooner than that. You might need to do it like, today, because this new law came down that really changes how we do things. Let's say you're a private real estate company and you go public and you become a REIT. Well, that changes everything in terms of your materiality, your stakeholders, your, reporting protocols. So 3 years is a good rule of thumb to kind of, in my head, but also be aware of significant market changes and situational changes that might accelerate that.
Yeah, makes sense.
So since we're talking about the future, let's look out 11 years, 2035, and you're walking around a city. What's happening? Are there solar panels everywhere? I don't know. What's the landscape? What is, what has moved the needle that we might see or be aware of or know? Like what are we actually going to do now that we've got data and we know that we're getting actionable insights and then they lead to a plan? What kind of plan?
Yeah, that's really interesting. I'll kind of keep it within the realms of real estate and buildings and the built environment, because I could wax pretty philosophical otherwise. But I I think you are seeing a transition from solar has really taken off. I mean, I just came from a solar company. I worked as an in-house ESG manager for a solar company, and I saw that firsthand. Whether it's rooftop solar on buildings or utility scale solar out in the fields, which one kind of dominates, or is it a mix? I don't know. So yeah, you'll see a lot more solar, energy storage, a lot more of that. Electric vehicles, I think that trend is still, we're kind of getting past Tesla. Tesla is kind of the leader, but there's enough market momentum that Tesla kind of ignited that the electric vehicles are going to be more and more. I don't know if you guys have seen them driving around, but the Amazon trucks that are built by Rivian are really cool. They're already, fleets are already doing that kind of stuff. So your city is going to be different in those quick ways. What's really interesting is what happens to office space and the nature of work, live, play communities and how that might or may not change. I don't have a prediction there. If I did, I'd be a real estate investor probably and going to buy up certain things. And then, I think you're going to obviously see the impact of AI and continued smart building type of stuff and algorithms that help us run our buildings in new and efficient ways. But that's always kind of been the case. You still need building owners and professionals to help manage the AI tools in a way. So I think that's going to be interesting as well in terms of what happens and how buildings operate differently. It's also kind of fascinating, just kind of what's happening in real time. You're seeing this pushback on natural gas in buildings. A lot of residential, this is for health reasons more than anything. But new construction in certain jurisdictions are getting residences like single-family homes. They're not allowing natural gas, and
Right.
changes the fuel mix and what happens in a building and what the energy profile of that building looks like. Electric vehicles in those garages of those homes, that actually adds a new energy source to the residence, which changes the house actually may use more energy, but it's actually better for the environment because it's not using coal-powered electricity. So there's lots of things like that going on that are still playing out. Yeah, I mean, we could probably spin a lot of interesting projections here.
What do you do when you're not saving the planet, Jack? What else are you into?
Well, I'm in the midst of a move. I'm moving from Oregon to Colorado for, after being in Portland, Oregon for 20 years. So that's fun and stressful at the same time. Personally, I like to travel, get outdoors, camp, hike. Photography is a hobby of mine. Soccer, I mentioned it earlier. I'm a big soccer fan, so I spend a lot of time watching soccer and enjoying that. Have a kind of.
Or you just spectate?
I actually, I grew up playing. So this is back in the 70s and 80s. When soccer was very well. There's a brief time when Helee played for the New York Cosmos in New York City, where soccer blew up in America, right? And so every kid in America was playing soccer, and that was my generation.
Okay.
So I, from grade school up into high school, I played soccer, then kind of let it slide for a while. I actually was involved in a men's over 40 league a couple of years back, but I'm way over 40 now. So, but it's always been part of my life, and it's always been the sport that I kind of gravitated to the most. Even though I grew up in Texas and football is king in Texas, but soccer was where I just kind of linked up. It's a great, icebreaker when you meet new people, especially from around the country, around the world. Everybody around the world probably has some familiarity with soccer or is passionate about their home country. So you meet somebody from Pakistan or France or Norway, and you don't know what to say to them, and say, "Oh, who do you follow in terms of the soccer in your country?" Or, "Hey, Norway did great in the World Cup last year," whatever.
Sure.
It's a great kind of conversation starter too.
Yeah, it's very, very international. It's gonna likely you'll probably bump right into that conversation that it's called football, not soccer, and that's a nice way to start it off too, I guess.
At least you won't have to lie and say you're Canadian like the Americans have to do everywhere else, because you can at least talk about soccer. You're a sophisticated American who can talk about football with them.
Well, I mean, we're getting off on a tangent here, but the funny thing is that the term soccer is actually an English term. They said it first, but then they rejected it after we took it over.
I just learned about that this week because this exact thing went down, because I was with all these Europeans, and they had the whole debate, and they kept quizzing me on words. Do I say lift or elevator, or, all these kind of things. And then they talked about soccer. And then this one person who knows everything told us that why it was called soccer, and it actually did make more sense, because I have no idea. I mean, no, it was more about also like why American football is called football was the other one, but that actually made some sense too if you really dig into it. So things usually do, I would say, optimistically. Like, even if you don't understand something, this is a bigger lesson for us all. If you don't understand something and you start learning, it's usually like there is some logic behind it and it makes sense.
Not to whip us back around to ESG, but there's a lesson there for us, right? Because messaging and terms we use have different histories and meanings. They change over time. I mean, ESG is political right now. We used to call it corporate social responsibility, called sustainability before that. It's always changing. But at the core, it's still the same thing. It's soccer, you're kicking a ball, and ESG, you're adding value and reducing risk.
And to Ryan's point about looking at it through rosy-colored lens or the optimistic glasses, when our team members would get down about the backlash or a pension fund pulling out of, or all the anti-ESG news, said on the bright side, for those of us who have been here in the industry long enough, at least people know what it is. I mean, I remember back then you had to explain to people what it was. You had to educate them. Now, at least it's mainstream. So if the divisiveness, if it's done nothing else, it's gotten it to a point that it's educated people on what it actually is.
Well, and I read it actually as a success story, because the reason you're having a backlash is it's scaring certain people. It's because there are some of the people funding different reactions against ESG have something to lose, and they see it. They see ESG as a possible pushing them out of certain businesses. It's, you know, so I view the backlash as actually a success story in a weird way.
Look at much like
Sure.
Taylor Swift now, we got haters.
Much like Taylor Swift. Well, yeah, I remember I liked to go green, going green. Let's go green. That was
Was
easy
that
one
your
for me.
favorite era of the, so that's ESG at what, like 5 years old?
Yeah.
That little child of ESG is to go green.
I think so, but I get it that it couldn't last. It's just not academic enough, right? Kind of like, oh man, this is probably risky, but yeah, like if you had a name, you know, and it was like Bobby or something, and then eventually you're like, okay, when are you going to go with Bob? You know, or no offense to any adults who stuck with Bobby, that's great, but you know, eventually it's oh, he goes by Bobby. Oh, okay, yeah, no, I said it's great. I wish it was still go green, but yeah, it felt like it had to be more academic, or was, you know, it was just going to get poo-pooed. Well, good. Before we have too much ESG fun, we can continue this conversation anytime, but we better get into our game here and see what happens from there. So, you ready?
I don't know what's going to happen for sure.
It's a game. It's real easy. This game is called Things Previously Named Other Things. It's one of my kind of favorite ESG things, like to get the word out there about not dead naming people. Whatever you want to be named is what you can be named. So that was the inspiration for the game. But the point is, we're going to look back at the old names. So what is the current name of the company that was once named Precision Optical Instruments Laboratory? And I'll give you some choices. Precision Optical Instruments Laboratory was the original name of this company. Is that company now A, Canon, B, Olympus, C, Kodak, or D, Warby Parker?
Just for fun, I want to say Warby Parker, because that just seems like too far of a stretch, but I don't know.
It is, you're incorrect.
Okay.
And obviously this was inspired by photography that I know is a hobby of yours. Canon is the answer.
Yeah.
They originally, it was a Tokyo-based company founded as Precision Optical Instruments Laboratory in 1934. And then when they really started getting into America, they came up with some camera called like something like Canon, and then they just made that their name, so it was easier for us to handle.
Well, I have owned many Canon cameras over the years, so I can relate, but I should have known that.
Actually, most of our guests get it wrong. Ryan, his games are difficult, so don't feel bad.
Okay, good. Thank you.
Big company. It's very rare someone gets it right, and when they do, I'm certain they got like insider information.
Well, and that's kind of the whole point. Don't go around calling them Precision Optical Instruments Laboratory. They said their name is Canon, so it's Canon.
Perfect.
All right. Well, with that, this has been another riveting episode of the ESG.
That's the whole game?
Yes.
That was the game. You were wrong.
Yeah, it's a game. That's it.
I was expecting layers and levels, and I had to advance to the next level. Okay. Well,
that's the next podcast. Ryan's going to whip together a trivia podcast.
Yeah, that was it.
Sounds good.
That's it. Yeah. All right. I shall resume wrapping the entire podcast now. Unless, do you want the last word? Why don't you take the last word, Jack? What's your parting words of wisdom for?
Well, just excited to be here. Glad you guys took a leap of faith and invested in me, and I'm hoping to return the favor, invest in the company and our clients.
All right. Likewise. We'll listen to this episode 1 year from now when you've made all this impact and change, and we'll say you did it, and we'll check a little box. We'll check off a task in Asana in the true Conservice ESG
about all
way.
the things that we've tapped.
Yeah, about everything that's been tapped. All right. So this has been another episode of the ESG Experience podcast. Thank you for listening. If you enjoyed your time with us, make sure to subscribe on your favorite podcast directory. There's a new episode every month. We appreciate our loyal listeners and subscribers for continuing to support our podcast. And if you want to continue the conversation between episodes, you can follow us on your favorite social media channel at #ESG Experience. Thanks again, Jack, for being here.
Thanks, Jack.
Thank you, guys.